Juicy. This week, we saw again one of the biggest convergences in modern financial history. And once again, barely anybody in the mass populace has noticed, but you're noticing if you're watching this video, and I'm certainly noticing, and we are the minority. The S&P Global just announced that they are essentially also going to be tokenizing the stock market. BNY Mellon, which is the world's largest asset custodian, one of them certainly announced on-chain bank deposits are coming. BNY Mellon should sound familiar because Ripple just recently announced that they are in partnership with them for custodianship of Ripple USD. Standard Chartered just projected a $1 trillion migration to stablecoins, and the Swiss National Bank confirmed that central bank money itself is going digital. Add in record Bitcoin inflows. And this week isn't about headlines. This week is about watching the blueprint of a new monetary system be drawn up right in front of our very eyes. Well, we might as well not waste any time because there is plenty to get into today. What is up, everybody? Solomon here. If you guys like this content, please like, subscribe, and share it because it takes me a lot to put it together on a consistent basis for you all. All right, BNY Mellon. This is a giant. So this is the elephant in the room here. This was just announced. For some context, BNY Mellon processes over 2.5 trillion in payments every single day and guards approximately $55.8 trillion in assets under custody. Bloomberg reported today that they are now testing tokenized deposits. Tokenized deposits are digital coins issued by the bank itself, backed one-to-one by commercial bank money, moving on blockchain rails, crypto distributed ledger rails, 24 hours a day, 7 days a week. Carl Slabicki, Treasury Services lead at BNY Mellon, said the goal is to, quote, overcome legacy technology constraints in cross-border settlement. Translation, the 50-year-old SWIFT pipes are being replaced in real time by programmable money. This is bigger than BNY Mellon goes crypto, as my thumbnail text suggests. What we're watching in real time with all of these institutions and enterprises that the vast majority of the world is missing is that we are witnessing the modernization of global cash flow itself. Instant settlement, real-time liquidity, and transparency that never sleeps, essentially being integrated onto blockchain, crypto, distributed ledger rails. BNY Mellon joins JP Morgan's JPM Coin, HSBC's deposit token service, Swift shared ledger pilots, Swift's blockchain infrastructure, and way too many examples that I'm not going to name right now, but you can watch old videos on this channel to catch a good amount of them, of what's occurring across the globe right now. All of these entities are pushing in the same direction. Commercial bank money that is rebuilt for the digital era. Now, BNY Mellon may ring a bell to you guys, as just a couple of months ago, we saw Ripple selected BNY Mellon, the world's largest asset custodian, to custody Ripple USD reserves as well. Now, they're the primary custodian of reserves for Ripple's enterprise stablecoin, which is Ripple USD. I always just call it Real USD or RLUSD, but Ripple USD. Issued under a New York DFS trust charter. Now, Ripple USD isn't just for retail trading. A lot of it's for institutional grade payments and on-chain liquidity. BNY Mellon in this relationship has been providing the custody, transaction banking, and compliance infrastructure. That means Ripple's regulated dollar token and BNY's tokenized deposit systems will now sit under one roof, not the same product, but parallel rails that, who knows, maybe can eventually interoperate. Stablecoins may handle global settlement. Deposit tokens may handle treasury flows. Now, no chain was named here, but Ripple USD does run on both the XRP ledger and Ethereum, showing how enterprise finance is naturally going to become multi-chain. I should also mention with the BNY Mellon tokenized deposit news that came out today, obviously across most of social media, you have to make sure you're doing your due diligence and stuff, because I see a lot of XRP to the moon stuff. And although I hold XRP and I'm bullish on XRP, I haven't seen anything about XRP regarding the announcement today, or even custodianship from BNY Mellon of Ripple USD as well. All right, so then came the S&P Global Digital Markets 50 Index. This is also absolutely massive. Let me pull it up for you guys. This is a new benchmark aiming to combine 15 cryptocurrencies and 35 public blockchain stocks into one tradable measure of the digital economy. S&P announced that they partnered with Dinari for this initiative, which will issue a tokenized tracker so investors can hold this index directly on chain. Think about this essentially being Wall Street's version of an ETF converging with Web3 and blockchain and crypto tech. Constituents have not been published yet, so we don't, I don't believe, know all of the networks. You can check this announcement out here as well. But constituents have not been named yet, so we don't know all the networks. However, S&P draws from its broad digital markets index, which already includes large cap tokens like Bitcoin, Ethereum, Solana, XRP, HBAR, and others. So this will be interesting to watch. When those names drop, we'll know which networks are officially recognized inside traditional benchmarks. This is just another example of an institutional bridge connecting crypto assets with public blockchain market infrastructure. You can go to genfinity.io and check out this article, as well as most of these articles that I'm reading for you guys today. Let me see and make sure I'm not missing anything else from Genfinity's standpoint. Standard Chartered. Okay, yeah. So we were going to roll over to this real quick. Standard Chartered predicting a $1 trillion stablecoin exodus from emerging markets. So while banks upgrade from the top down, the bottom-up revolution is even louder. Standard Chartered just warned that by 2028, emerging market banks could lose over $1 trillion in deposits to USD-backed or pegged stablecoins. They project savings in digital dollars jumping from $173 billion to $1.22 trillion, about 2% of total deposits across 16 countries, including Egypt, Pakistan, Bangladesh, Sri Lanka, Turkey, India, Brazil, and more. The driver to all of this, inflation, broken currencies, and a band-aided on top of band-aided financial system that just isn't working anymore for a lot of citizens across a lot of different nations. People are no longer speculating about the future of crypto. They're protecting what little value they have left. And stable coins, among some of the other things we've talked about, are giving them borderless access to the dollar, or at least a little bit of financial stability without the fragility of local banks or maybe their national financial system, whatever it may be. So very clearly not a fad anymore. Again, a rewiring of the global savings systems. All right. Also on the institutional front, let me pivot back here. And guys, I know this is a lot of news to get into, but I'm trying my best here to pivot because there's just so much to get into every day. Institutional Bitcoin adoption set to drive a new price discovery phase. I will issue a word of warning with something like this. Anytime crypto is at all-time highs, probably not the best time to be getting in. That's my opinion. I'm certainly not a financial advisor. However, I think most institutions and enterprises at this point in time do see the writing on the wall, not only with Bitcoin, but altcoins as well. And I think we're going to see tokenization be a gigantic catalyst of that. I also believe, maybe not this cycle, but in the very near future, we're going to see artificial intelligence and agentic AI be a very big catalyst of that, which networks can automate efficiently, because that's kind of the whole purpose of agentic AI, is automation and streamlining different flows, learning models, learning algorithms, all that stuff. You can't really do that on a network that is inefficient or expensive, or you can't schedule things on. Actually, as a sidebar, I think it's one of the more interesting things for the Hedera ecosystem. Full disclosure, Genfinity has a media partnership with the Hedera ecosystem. However, from my personal standpoint, fees pegged to the dollar, I think, are very interesting for automation, for scheduling transactions, which should be potentially perfect for something like agentic AI workflows, liquidity pathfinding, all that stuff. All right, anyways, let me pivot back to this. Institutional Bitcoin adoption set to drive price discovery phase. Bitcoin ETFs literally just logged nearly $6 billion in weekly inflows, pushing Bitcoin to a new all-time high around $126,000. For the first time, pension funds and asset managers are buying Bitcoin like they buy gold through regulated channels with custody, compliance, and long-term mandates. That stability is changing the market DNA of crypto. Eventually, every ETF inflow will have this infrastructure. The infrastructure will serve, that already serves things like Bitcoin and Ethereum, will serve Solana, XRP, Hedera, XDC, all of these assets, and future tokenized asset products as well. You guys know my thought process, and if you don't, it's that this is not a one winner take all type thing we're witnessing here. This is literally an upgrade to the internet itself. It's an upgrade to the entire global financial system. It's an upgrade to the way that we interact as human beings. It's an upgrade to the way that we use social media. I fervently believe that crypto is the next iteration of everything that we do in our life and in society. I think it's just going to take us a little bit of time to get there. So when we see all of these amazing things happening for Bitcoin, Ethereum, et cetera, I believe that these same things are going to be happening for XRP, HBAR, pick a name, pick an asset, whatever. Granted, it's always good to see that stuff kind of get through. All right, and then I want to kind of close out a little bit here. I haven't done as many deep dives recently, but I stumbled across this, which I'll share my screen here. I should preface, go to genfinity.io if you want to read any of those articles. And let me also do a soft plug here. So did a couple of really good Algorand ecosystem interviews. Obviously, do your own diligence. There's a media partnership with the Algorand Foundation here, but trying to knock out as many of these Algorand ecosystems interviews as possible. They have a thing called Algoland going on right now, which I've plugged before. There's a referral link that I gave a few videos ago. Again, that is not financial advice, but that is not through any sort of purview out of Genfinity stuff. However, I'm personally participating in it, trying to kind of learn the different projects across the Algorand ecosystem. And I've been doing some pretty good short form content here from the DeFi perspective from them. And then I did the wallet perspective. They have prediction markets. So trying to just knock out a lot of content. Also, good cross-chain space from that's a Hedera space from last week. There's a cross-chain space the week before. And I mentioned the Cardano clip from yesterday. So let me share this. This is the Swiss National Bank. So it was a soft Genfinity plug. Please give us a follow at Genfinity.io and Genfinity.io. Anyways, Swiss National Bank just published results from its Helvetia 3 pilot run with 6 Digital Exchange and the BIS Innovation Hub. They successfully settled tokenized securities using real central bank money on a distributed ledger, proving that wholesale central bank digital currencies can function in production environments. So to give you guys a little bit more background here, I know we covered a lot today. I've got to try to figure out a way to maybe get some graphics. I need probably some sort of an editor to help me with some of this stuff at some point. The private sector. When we think private sector in crypto and stablecoins, think stablecoins like USDC or Ripple USD or RLUSD. When we think commercial banks, think deposit tokens like we mentioned at the beginning from BNY Mellon. When we think central banks, think wholesale and retail central bank digital currencies. When you think central bank digital currencies, wholesale central bank digital currency is think about it as entity to entity, business to business, bank to bank. When you think retail central bank digital currency, think digital dollar, right? And obviously everybody has their own thought processes and caveats with CBDCs. Certainly if they're done incorrectly, that becomes a really scary thing for privacy and all sorts of stuff. I will say I've seen a lot of pivoting back from central bank digital currencies over the past 24 months. A lot more bank deposit backed tokens, a lot more stablecoin talk. So I think the CBDC thing, while still certainly occurring in some of these nations, probably, I think that the stablecoin stuff is maybe going to rule the roost in some of these tier one nations and maybe some of the bank deposit tokens as well. At least that seems to be the trend over the past couple of years. There seems to have been really a stepping back from CBDC, which is probably a good thing, because if they get CBDCs wrong, I mean, there's already a lot of scary stuff going on in the world, let alone like, physical cash is like one of the last remnants of like being able to kind of manage your own financial decisions without Big Brother. like if CBDCs go wrong, it's horrifying. Anyways, I've seen that stepping back. So, but again, private sector, stable coins like Ripple USD or USDC or USDT, commercial banks, deposit tokens like we saw in BNY's pilot, and central banks, wholesale CBDCs or retail CBDCs. So each representing a different layer of money essentially. And when those layers interoperate, you kind of get this end-to-end on-chain settlement across the $150 trillion plus global payments and securities market. Now, the Swiss National Bank's success, as I shared, they go over, means that the sovereign layer of finance is catching up. And it validates what BNY Mellon, Ripple, Standard Chartered, and obviously many, many others are already building. I saw a tweet today, too, from AUDD, which is the Australian stablecoin. And they looked to have leveraged Stablecoin Studio from Hedera. I didn't mention it in here, but I saw that tweet, so I'll mention it. So what does all of this stuff mean? I mean, here we are again. I'm doing another video. There's all sorts of stuff going on across the globe, and yet price action seems to, for many of us, seems to stagnate, and it's frustrating. But I will say we have to really sit back a little bit. I mean, XRP, whatever XRP was at a year ago, certainly it wasn't at $3. Even HBAR. I mean, HBAR wasn't at 20 cents or 24 cents. I don't even know what HBAR is at right now. Probably at 4 cents or something like that. So like a lot of these assets, like one other thing. So I took a screenshot today. I was going to, a lot of people are saying that we're in this utility cycle, this utility bull market. I took a screenshot of, when you're on like Twitter and some of these platforms, and it's like today's top gainers, and it gives you like 6 or 7 coins. The coins were literally like Doug coin, Gary coin, fart coin, like whatever you want to name, like just literally stuff that a year from now is probably not going to be around. So when I, think about all the verbiage that we're in this utility market, I've got to step back and be like, we are definitely not yet. Even though we see all this crazy adoption, and it seems like something's got to give at some point in time. I mean, like I said, I don't even think the real world asset stuff, the tokenized real world assets are going to really impact how people look at these different networks, probably until next cycle. I mean, we see some early iterations of winners and losers, but the aggregation sites for RWAs don't even have all the assets yet. It'd be like looking at CoinGecko or CoinMarketCap with only maybe 30 or 40% of the assets on CoinMarketCap or CoinGecko. So what's the purpose? Like RWA.xyz still doesn't have all the ecosystems that have RWAs on there. The projects themselves, which I learned, I believe they are the ones to be updating those tokenized real world asset numbers. They're the ones that have to kind of do their own due diligence and update their numbers. I'm sure that goes into auditing on all sorts of stuff, and then updating those numbers onto a site like that. We don't even see that stuff being accurate or streamlined yet. So anyways, I'm rambling. What does this all mean? BNY Mellon is tokenizing bank money. Ripple and BNY Mellon connecting stablecoins in custody. S&P Global tokenizing market exposure. I'll wait for this to go by. Standard Chartered quantifying the stablecoin migration. SNB, Swiss National Bank, validating central bank money on chain. Bitcoin ETFs, institutionalized digital assets. This is kind of like there's just so much news on a daily basis. Private money, bank money, sovereign money, all moving towards digital rails, each reinforcing the other, each kind of having that feedback loop and that flywheel effect. These private or public sector and private sector parties building out all of this stuff. You've got retail, so the UNIs of the world. There's developers out there that are very much so retail, building out all of the innovative stuff. I mean, these banks and entities, these guys are not innovating. They've not innovated for decades. What they're doing now is integrating based on results from the innovation, which is why I did see another post like a week ago that was like, you and I still have a leg up on these big enterprises and institutions. That is true. If you do your own due diligence and research in this space, crypto, blockchain, distributed ledger changes so quickly that the banks and enterprises cannot keep up. That being said, you're weighing out risk at the same time too. I do think there's going to be tons of opportunities continuing down the line as long as they don't regulate us out of these markets with agentic AI and all sorts of different things. So it really is about paying attention and trying to be a first mover on some of this stuff, because these banks and these enterprises are not first movers. They're just integrating what works, what's going to save them. They don't care, and they don't care at all about the technology. They care about saving themselves money or making money. Those are the only two things these banks and enterprises care about, and they care about doing it compliantly. But anyways, each reinforcing the other. Private money, bank money, sovereign money. And all of this stuff will be multi-chain by design. This is why you see these gigantic entities partnering with multiple players. That's why you see a Deloitte, a PricewaterhouseCoopers, a Boston Consulting Group not being blockchain or crypto specific, but being agnostic and integrating just as many as they can that fit within whatever they want to do. Because it is going to be a multi-chain world. Ethereum, still the lion's share for tokenized assets. Solana, we still see kind of the lion's share for SocialFi, consumer speed, throughput, as of now at least. XRPL, we know deep liquidity and things like that. I think Hedera, from a trust standpoint, from an auditability standpoint, from a green standpoint, has a lot of really interesting things going for it. You can take any of these networks and really try to figure out where they have won. XDC from a trade finance standpoint. Chainlink and Quant from an interoperability standpoint. And I know that there's a lot of Chainlink versus Quant community battles, but I could care less. I mean, I hold both, not financial advice. It's my personal decision. But I think Chainlink has been doing some really interesting stuff over the past handful of years. I think Quant has also been doing some really interesting stuff. I didn't share it today, but I think that somebody was catching testnet flows of the tokenized sterling deposits, another bank deposit use case coming out of the Quant ecosystem. But I think somebody was catching testnet transactions. You could probably find it on Twitter of those tokenized sterling deposits. Also saw like some whale action going on with Quant, which is pretty interesting too. And then, I didn't get into too much Chainlink stuff today, but I always try to catch that stuff. So anyways, I don't look at this stuff as competition. I know that most people do, but we still don't have 95% of the mass populace in crypto yet. So we're literally, all these networks and all these communities are competing for recycled liquidity instead of like competing for the 95 or 95% of the people that just aren't here yet. Let me try to close this out. What we're witnessing is the internetization of value. I like that term. The global financial system, roughly $150 trillion is money, and money and securities is being rebuilt around tokenized infrastructure. The winners won't be the loudest. They'll be the networks that integrate the fastest, bridging compliance, scalability, and real-world use cases. So whatever your lane is, whether that be Bitcoin, Solana, XRP, Hedera, Avalanche, BitTen, I mean, so many networks out there. There's like, what did I say, 20 million coins at this point in time. Understand the direction of travel. We just did a video yesterday where the CEO of Robinhood said that tokenization is going to eat the traditional financial system. If you don't see it coming, you're going to be using it at some point without seeing it coming. I don't know what to tell you. Banks, regulators, builders are finally speaking the same language, especially in the United States. This was a big shift since October, November last year in the new political regime. We see action, which, regardless of your political views, we see action for crypto and blockchain technology, which is better than what we've historically witnessed. The question isn't if this shift is going to happen. It has very clearly happened. The question that you need to be asking yourself personally is, are you prepared? How are you prepared? How are you preparing? And what are you going to and where are you going to be when everything, all of this stuff does go live? And it's going to be lighting up at different times, obviously. But yeah, that's why we're here. That's why we're doing this consistent content. I hope you guys enjoyed it. It's a lot to compile. It's a lot that we went over. We went over essentially like 3 different forms of like stable money. But Yeah, from S&P Global announcing they're launching a digital markets 50 to institutional Bitcoin adoption to Standard Chartered predicting a $1 trillion exodus into stablecoins from emerging markets, to BNY Mellon, to Ripple, to the Hedera stuff and XTC and everybody else in between. I hope you guys enjoyed this because my voice is dying and I'm going to hop from there. So I'll talk to you guys when I talk to you. All right, bye.